All right. We are live. Just gonna wait a couple minutes, guys, as people start trickling in. All right. All right. Welcome, guys. Welcome. Thank you for joining. Getting started very shortly here. All right. Let me know if you guys can hear me, please. Let me know if you guys can hear me. Just want to make sure audio is all good. Okay, we're good. Let's get started, y'all. So today we're going to talk all about psychological levels, guys. Psychological levels. And maybe you've heard this subject before. Maybe you already know about it. But it's a very important subject. It's not talked about a lot in the forex community, the trading community, but it's significant and it's something that you should be aware of, right? So, psychological levels, some people know them as psychological levels, some people know them as bank levels, right? Some people also refer to it, the entire thing, as the quarter point theory. And what they are, first of all, when we think about the areas in which we like to draw like support and resistance, right? And you think about the areas where you like to put your stop loss. You think about the area where you like to put your TP, all of these areas. Now, if you actually looked into the details of these areas and if you actually look at the cadence of where you usually set areas of stop losses or areas of TPs, areas of support, areas of resistance, if you actually pay attention to it, what you'll realize is that they actually have something in common, right? And what they have in common, usually most of the time, is they usually are around somewhat of a whole number, right? They're usually around somewhat of a whole number or a quarter of a particular number, right? And what we're going to do on the charts today is we're going to go through what those psychological levels are, or those bank levels, right? And we call them bank levels because this is usually the types of areas that banks will execute and close their trades, right? And we're going to see how significant they are on the chart and how they naturally are become areas of support and resistance overall. All right, guys. So that's what we're going to do here. And for us to really understand this, I'm going to try to break it down as simple as possible, but definitely stop me if you feel like you are confused or you need extra explanation. Feel free to use the comment box if you need any further clarification, for sure, guys. Okay. So let's start with just the psychological levels before we get into the entire theory, the quarter point theory, right? When we talk about psychological levels, we're talking about some whole levels on the chart. What I mean by whole levels, so for example, we're using UJ, for example, right? On the 30-minute right now, we're using UJ. And if we look, all right, guys. I think somewhere along the way my mic got muted. But if I'm looking at the whole numbers, right? I hope you guys can hear me now. We good? We good? Let me double check on my end. I think audio is back on. Double check on my end. Okay, perfect, perfect. Thank you, guys. All right, guys. So psychological levels. We're looking at whole levels, right? Whole levels right now. So when I'm looking at the UJ chart, what I mean by whole levels, whole numbers, right? So we have many different types of numbers here on the left panel, right over here on the left panel. This is where I'm at on the left panel. And you can see 148.200, 148.400, 600, 800, etc. But what I'm looking for real quick is just a flat whole number, real quick, right? So 147 is that number I'm looking at, just that flat whole number, 147. I'm gonna mark that off, right? 147. Then the next whole number is going to be 148, right? I'm gonna mark that off, 148. All right, it's not perfect, but just about there. And then the next one after that is going to be 149. 149 is all the way up here. And I'm going to mark that off right about there. Okay. So we have 148, 147, 148, and 149. Right. And what you'll see within these whole numbers here is it should be 100 pips between them. Right. 100 pips between them. In Forex, we count pips. You might be counting points or something else, depending on what you're trading, if you're trading stocks, etc. But the theory is still the same. There's going to be somewhat of a consistent range in between those whole numbers, right? For Forex, it's going to be 100 pips between those whole numbers, all right? So between 147, I'm using my ruler tool here, right? From 147 to 148 is 100 pips, all right? Same thing from 148 to 149 is 100 pips as well. Okay. So that's the beginning. I'm going to add a few more I'm going to mark off a few more of those areas. So I'll mark off 146 so we can cover as much as possible. 146, try to get as close as possible, just about 146, 145, just about. And let's just do 144 just for the heck of it. Right. So the first thing I want you to notice, right? The first thing I want you to notice is that as price is making its rounds, and you probably notice this more on the higher time frame, but as price is making its rounds, what you'll see is a lot of times price is going to test these areas, these particular levels, right? And the reason why we call it bank levels and psychological levels, because it's at these levels, banks, large institutions, hedge funds as well, they like to set execute their orders as well as exit their orders at these nice round whole numbers, right? And we do too, to be honest. When you're looking for, typically when you're looking for a TP, a stop loss, especially when you're looking for a TP, if you're looking for a TP, a lot of times in your head, you're like, I'd like to TP at 147. I'd like to TP at 148, etc., so on and so forth. All right. So if we just take a look here, how significant these areas are from a higher time frame perspective, let's take a look. Notice how we get to this area, right? We get to the 144 area. We reject off of it, right? So naturally, this area, this 144 area, becomes an area of resistance. We naturally rejected right before we got to that 144. We touched it, right? We wicked it, and then we had a rejection. After the rejection, we retried that 144 area, was able to break through. We broke through that 144 area, right? Eventually, we got past the 146, but look at where we retested. This is what I want you to pay attention to. Where did we retest, right? We retested at this particular area right over here, okay? That area is the 145 area, right? That's the price, 145 as pertaining to UJ, guys. So we retested at that area before we again took a move to the upside, all right? And again, we came back down, retested this 145 area, went a little below it, right? But eventually came all the way up to where? This area over here, that's the 147 area, right? Got to the 147 area, came back down, retested again, right? Retested again this 145 area right over here before we made our move to the upside. And then we can keep on doing this, so on and so forth, right? So we can see on a higher time frame how these big levels, those big whole number levels, those psychological levels are so significant, right? So along the way, somebody came with a theory called the quarter point theory, right? And in addition to whole numbers like 147, 148, 149, in addition to those levels, we also have other levels that typically serve as psychological levels too, right? So not just 146 to 147, but also 147, 146, 500, 147, 500, 148, 500. Those are also areas where in our brain, psychologically, these are satisfying numbers, right? Even if I don't see price going all the way from 147 to 148, 147, 500 is a satisfying number, right? And what the quarters theory also realizes, you can even break this down in quarters. So not only is 147, 148 great numbers, 147, 500, 148, 500 great numbers, but you could break this down in quarters, right? 25, 50, 75, 100. So in other words, right, if I'm starting from 144, right, I can take 144 to 50, all right? I might have to go to a lower time frame to get this easier, right? So I could get 144 to 50. Let me try to get as close as I can, all right? I could get 144, 500, 144, 500, and I can get 144, 750, okay? Did you guys get that? Again, the quarters, right? What's a quarter? 25, 50, 75, 100, right? So starting from 144, right? You had 144.000, right? Then the next level is 144.250, at 25. 144.550, right? 50 cents. 144.750, right? And 144 and 145, sorry. And 145, right? So now if you actually break this down between 144 to 145, all right, we had 100 pip range. Now, how many pips, this is my question to you guys who's listening, right? How many pips between each quarter point do we have, right? Should be fairly easy. How many pips should we have between each quarter point? That's the question to you guys, right? So again, between the ranges of 144 to 145, 100 pips, 145 to 146, 100 pips, right? How about these quarter points? How many pips should be between them, right? How many pips should be between them? Who got the answer? How many pips should be between these quarter points, right? 25 pips, right? 25 pips should be between them. So if I go down to a lower time frame, I get to break this up a little further, right? I get to break this up a little further. So I have now between 144,000 and 144,250, I have 25 pips of a range in between here, right? And same thing between 144,250 to 144,500, I have another 25 pip range right over here. Okay. So now the reason why the quarter points are important is because it allows me now to break down the charts to a point where I can now take trades on a lower time frame. I don't have to swing it at 100 pip increments, right? I don't have to take it from one zone all the way to the next 100 pip zone. I can break this down and take 25 pips at a time and see how significant those 25 pip ranges are on the charts. You're not going to see how significant they are necessarily on the 4 hour, right? On a higher time frame. But if you go down to lower time frames, like 30 minutes, like the 15-minute time frame, you're going to start seeing how significant these areas start to become. Okay, so if we start looking at this in the 15-minute time frame, let's start with where this uptrend started. This uptrend started right around here, right? Uptrend started right around here. And let's follow what happens as this uptrend starts, right? We finally get into, give me 1 second. We get into this 144 range, right? And where do we stop? Where is the TP for this range? Where's the TP? The TP happens to be at 144,250, right at our quarter point. 144,250, right there, exactly, right? Now, don't get me wrong. The retest goes beyond, right? And if the retest goes beyond that, all you got to do is keep on drawing your quarter points, right? Keep on drawing your quarter points. Below this, the next quarter point below this should be 143,750. So let me see if that became of any significance when it retested below this. 143,750 is like right here. Look how significant that was. Multiple times over. 140. So we got up to 144,250 right over here. We retested where? We retested at 143,750. And the significance of this is that when I see that price is retesting at a quarter point, and how do I know it's retesting if I'm just using a quarter point theory? I'm looking for wicks, right? I'm usually looking for wicks around those quarter points. Okay, so that wick for me is very significant. It means it shows me price is telling me that it's rejecting that area. In other words, it respects that area as an area of support in this case, right? Or if we're talking about a downtrend, it respects that area as an area of resistance. Okay, so because I see that wick, I'm starting to see that, okay, price probably respects this area as an area of support. Maybe if I even go down on the 5-minute, remember how we broke this down last week when we were talking about catching sniper entries? Maybe if I break this down in the 5-minute, I could even catch a sniper entry using my quarter points. All right, let me go to the 5-minute. Let's see if I get more confirmation that that is an area of support that could be held. Okay, so let me just find that area where I was at. Hopefully I can get to it. All right, yes, I can. All right, perfect. So this is where we are on the 5-minute. So notice what happens here on the 5-minute. We get this couldn't be more perfect. We get to 143,750 on that quarter point, right? We reject that. We reject that. And in the very next candle, we get a push, a strong push to the upside, also gives us somewhat of an engulfing candle. Even if you waited for this candle to close, let's say you waited for this candle to close and then you took your buy to the upside, this would be a scalp. Don't get me wrong, this would be a scalp. But this is how you can make your money even at small increments. Even while scalping, you can make your money, right? So even if you are a scalper, you can use the quarter points, go down to a lower time frame and take this very short buy. This buy is probably like no more than 10 pips or a little more than 10 pips. It's, yeah, just about, if we're taking it to the quarter point, just about 12 pips, but it's still a win, okay? Let's continue to see how significant these quarter points, or in other words, these psychological levels become, right? So let's continue to see. So we come off this, that was the buy, right? and we go back to this area, we go back to the upside, and where does price retest again? Price comes back to retest this area right over here at 143,750. Do you trade small caps? I'm actually not sure what small caps is. If you don't mind elaborating, NASCAR All Out. Do you mean by scalping? Do you mean by what do you mean by small caps? Just elaborate for me, and I'll be happy to answer you. So we retest at this area, and we already see that area is significant. But why this buy to me is even stronger? Let's look at the price action, guys. Look at the price action. Look at the wicks, the rejection wicks on this area. So price comes down. Let's put ourselves in a real life scenario. Price comes down, and it looks like when this candle closed right over here, it looks like price is closing below my quarter point, right? So it may be pushing lower. But when I wait for the very next candle, right? The very next candle stays around this quarter point area. And then the candle right after that shows me a nice rejection off this quarter point area again, right? So with all of this data, this wick, all of this respect towards this area, and not only do I have that, but I also have previous data. And if I just get myself out of just a quarter point and get myself to something that is probably more familiar, and I just say, hey, this is just support. This is just support over here. This is what I know. If I tell myself that this is support, right? That's what the quarter points are, then I know that I can capitalize on a buy, especially once I see this big breakout over here from this candle. So now once I get my big breakout from this candle, I can take my entry. From here, gives me a little bit of drawdown, but nothing crazy. And I can take this to the next quarter point, right? I could take it to a couple quarter points, right? But the point is I could take this to the next quarter point, and that is 34 pips. Your stop loss could be right below here. So your stop loss is about 24 pips, right? Not necessarily a 1 to 2, but a pretty decent trade, not a crazy stop loss, but very confident, a lot of confluence behind it. I have support, right? It's backed up by hitting a quarter point to the T, right? A lot of support and respect at that quarter point, and then I had a breakout from that area that confirmed that price is probably going to continue going upwards. All right. So, all right, my friend just elaborated on the question. Let me see. So, just companies with small market caps, something under 100 M market cap. Okay. MINM would be an example. 50-minute market cap that has run from $2 to $7.72 in the past. So I don't necessarily trade it. But what I can say is chart work is chart work, right? I don't necessarily trade it. I stick more to the Forex areas, commodities, stuff like that. The stock game is not necessarily something I'm ingrained in, but chart work, it's still chart work. And I do believe that the quarter point theory will still work on stocks or anything that you're trading in particular. You could add that to your charts. It will definitely work, guys. All right. I think my battery is dying. Let me just add this. Right. Psychological levels indicate areas of support and resistance. Absolutely. All right. You're seeing that now. And I'm gonna go through not only UJ, because I want you guys to see the proof, right? I want you guys to see the proof that this works not only on UJ, not only on other like a couple pairs. It works on any pair. You take any pair and you break them down into quarter points, you're gonna see how much this works. As this move continues, we see that it retests, doesn't touch the quarter point to the T, but still respects the area, right? Respects the area of the quarter point, comes back to the upside, right? And where does it get to? It gets to this area right over here. We retest at the quarter point right over here. We make it to the next quarter point right over here. We retest again at this quarter point right over here. And then we're on our way all the way to the upside to probably the next whole number, which is, let me see, to the next whole number, which is 146. Okay. So again, these areas are significant, even where this particular trade, even when this price action found an area of resistance at 145,750 at that quarter point, you can see again those quarter points are being respected. This is around 145,750, around that area. This quarter point, respect to that quarter point. A lot of respect. All right. Many ways of looking at this. You can look at it as respect to the quarter point, and you can look at it. Another confluence is that this is resistance. So do I have room for a small sell, right? A small sell. Yeah, I have room for a small sell coming off of this area, especially if I see that this small area of support has been broken, right? Once this area of support is broken, I can go down to the lower time frame on the 5 minute. Once that area is broken, I can go down to the lower time frame on the 5 minute. We're going to get to that area shortly. Yep. Once we see that that is broken, get to that lower time frame on the 5 minute, right? It breaks where? It breaks right around here. Right around here. This is where it broke. If I take my trade at any point over here, do I encounter a little bit of drawdown? I do, but ultimately I still get a pretty decent trade as I take this sell. Okay, I take this sell. This sell went as far as 20 pips. Not too bad. Not too bad at all. Right. So again, you can use this in many ways. Many ways to apply the quarter point theory, right? Now I want us to use a whole different pair. I want us to use gold and a whole different number schema, because I want you guys to start understanding how to apply the psychological levels, how to apply the quarter points, and how they apply to every single chart. It's just about understanding the number schema, and then you mark off your levels, and then you see how those levels are respected. Let's use it with gold. All right. So let's start with first the whole numbers. The whole numbers, right? The whole numbers with gold. In other words, the 100-point increments, the 100-point increments. Now with gold, it's a little tricky, right? Because with gold, the 100-point increments can seem like tens. All right. So this is what I mean. So if we're talking about 100 pips, give me 1 second. Let me get my horizontal. All right. Well, if we're talking about 100 pips, 190, let's start at 190. The next one is going to be 2000. The next one is going to be 2010. 1 second, 2010. Then followed by 2020. Just about. Followed by 2030. 2030. I'm just trying to get as close as possible. All right. Then 2040. 1 second, guys. 2040. Then followed by 2050. 2060, and 2070. Let's stop right there. All right. So these are going to be those whole numbers for gold. Okay. So again, how do I know? Get my ruler between the levels. Is it 100 pips? Is it 100 pips? 100 pips right there. Okay. My ruler. Is it 100 pips? Yes, 100 pips. All right. Between each level. Right now, I want to break it down to the quarter points. If between, let's start with 1990. If between 1990 to 2000 is 100 pips, where is my first quarter point? If between 1990 to 2000 is going to be my 100 pip range, what number, what price is my first quarter point when we talk about gold? What price is my first quarter point? That's the question for you. What price is my first quarter point? What do you guys think? Again, starting from 1990, what price is my first quarter point? So, all right. So my first quarter point is 1992.50. All right. 1990, not 1925, right? 1992, because we're in the 1990s, right? 1992.50. That's going to be my first quarter point. 1992.50. And we can double check. Let me show you. 1992.50. Let me try to get as close as possible. That's 0.64. Let me just try to get that as close as I can. 1 second, guys. Let's make this 0.50. All right. So 1992.50. Let me test this to make sure I am correct, right? Let's make sure that that's 25 pips between 1990 and 1992.50. Okay. Let me just test that to make sure. Let's go down. Let's go down. Let's go down. All right. So between this area, these two areas, we should get 25 pips. So from here to here, 25 pips, right? Just about 25 pips right over here. Between here and here, about 25 pips. So that's perfect. I'm not going to go through every single quarter point. It's going to take some time. So what I'll do is I'm going to go through the half points, right? So instead of doing that and breaking it all down, let's just go and see how significant the half points will be, right? So we got 1990. We're gonna mark off 1995. Okay, we're gonna mark off 1995, and then we got 2000. We're gonna mark off 2005. All right, we got 2010. We're gonna mark off 2015. We got 2015. We got 1 second. Mark off 2015. All right, we got 2020. Let's mark off 2025. We got 2030. Let's mark off 2035. We got 2040. Let's mark off 2045. We got 2050, and let's mark off 2055. All right, and we're going to stop there right at 2065. And now we're going to break this down. Let's go into the charts. Let's dig in, right? Let's go into the charts and let's see how significant these points, these psychological levels become. All right. So now let's check this out, guys. Let's go. Let's zoom in. Let's see what's going on, and let's see how significant these levels become when we talk about gold. Okay. All right. Let's start off right here at the beginning of this small trend over here. Okay. So starting off right here, where does it start off? Starts right there at that quarter point. Starts right there at that quarter point. Okay, perfect. So you can take this from a 25 pip range. See, that's the thing with gold. Gold moves so much, right? And it's so aggressive. You can go even to the 5-minute time frame and start taking this from the 25 pip ranges, and you could get a 25 pips just from here to here. Okay, let me show you how you could have easily, just at the very start of this trend, been profiting. If you're looking at the 5-minute and you see respect, you see these wicks at this quarter point, right, at 2015. Let me see if I can get to the 5-minute to this area. This area is, give me 1 second, guys. This is Friday, December 15th. So let's go to the 5-minute. Let's go to December 15th. Let's see if we can get there. Can we get there? All right, perfect. All right, so on the 5-minute, I rejected this quarter point. I got to the next quarter point. Fine. So I'm just observing, right? Real live market environment. I didn't know price was going to settle here. I didn't know price was going to necessarily find resistance over here. But as it does, right, all I can do is prepare myself for the next move. So when price retests, right, it comes back to this area, back to this quarter point area, right? As it comes back to this quarter point area right over here, now I could take my small buy to the next level, right? Now I could take my small buy to the next level. So in other words, what I'm really seeing, right? Because I could see this in many ways. What I'm really seeing is that price formed an area of support and resistance right over here. This was a little bit of resistance. This became a little bit of support, right? And support turned into resistance as well. And what I could do is, let me just show you guys. What I could do is, as price breaks out of this area, as price breaks out of this area, let me fix this a bit. As price breaks out of this area and shows me that it's breaking out, I can take my buy, whether it be from this candle or I take my buy from this candle, and I can ride it to that quarter point or the next quarter point. Okay, I could take it from that quarter point or the next quarter point. If I'm taking it to this quarter point, it makes sense because I know there was an area of resistance already. Okay, there was already an area of resistance. There was respect, number one over here, respect over here. So it's okay for me to take maybe what 10 to 15 pips to that area, okay, until it shows me otherwise that it's going to go further. So if I take my first buy, again, short scalping move, but if I take my first buy right over here already, I already made a quick, what is that, 15 pips on this buy, right? Ride this to this level. I already made a quick 15 pips on this buy. I hope you guys see that. And please feel free, please feel free to ask any questions. I see Dylan, there might be a little confusion, right? But feel free to ask any questions. I know it's a hard concept to grasp, right? But I will happily break this down even further if you want me to, depending on where you're confused, all right, guys? So again, I'm looking at the quarter points, right? And I'm incorporating other things that I know, right? I'm looking at the quarter points, price respected the quarter point. And now all I'm doing by adding this area of resistance and adding this area of support, all I'm doing is adding confluence. I already know about support and resistance, right? But quarter points is just like, okay, it's just an added confluence. It respected a particular bank area, a bank number, a quarter point, right? It respected that. That's a confluence, right? But what other confluences do I have? Do I see support? Do I see resistance? Do I see a retest? Those are the things you want to put together, right, with the quarter point so that you can feel more confident in taking that buy or sell, depending on what you're taking. Okay. So in this particular situation, I took a small buy, capitalized on the buy. Let's continue to see how price continued to respect these areas. Okay. Let's continue to see how price continued to respect these areas. I'm going to go on the 15-minute. Let me know any questions you have, guys. Add it to the comment, please. Add it to the comment box, and then we can break this down even further. All right. But let's see where we're at here. Okay. So we get to this area, right? We get to this area, this particular quarter point. We get to 2025. We come back down. We retest. We go a little lower than the 2020, but we still respect this area of 2020. And from this area, from 2020, we take a buy, right? There's a rebound off of this area all the way to that next quarter point. So from 2020, we have a quick buy to 2025. Okay. From 2020, we have a quick buy from 2020 to 2025. If I dig deeper, same thing as what we did last week when we were talking about how to get sniper entries, right? If I want to get a sniper entry and I'm seeing that this quarter point, right, is being respected, then as I see a move that breaks into this area, I can take and ride this buy from one quarter point to the very next quarter point. All right. I can take this buy from one quarter point to the very next quarter point. And I can do that again as price comes back down to that same quarter point and then takes a huge buy. So I can do this, take this buy from here to here, allow price to retest to the quarter point again. And then as price is ready to take off, take that buy all the way up. Okay. Now, let's take a look at this on the 5-minute time frame. Let's dig a little deeper to see where we take our entry. Okay. So let's say, let's go on the 5-minute. All right. So let's say, guys, I see that price went past this quarter point, but came right back in. All right. You came right back in. What are you trying to do? What are you showing me? What are you trying to do? Are you going to respect this area or not? Right? Comes right back in. Price is showing me that there's some bullish pressure. Fine. I can definitely take this buy over here. But even if you are unsure and even if you're not comfortable taking this buy because it kind of broke this quarter point, fine. Wait. Allow price to show you what it's doing. We are on an uptrend so far. And allow price to do what it's doing. Price comes back down to that same area, but this time shows immense respect to the quarter point area, right? Shows a lot of respect. Comes to this area, rejects. What am I looking for again? As price comes here, I'm looking for those wicks. All of those wicks, I'm looking for those wicks because it's telling me that it respects this area as a quarter point area, right? Respects this area. Okay. So as it respects this area, I can confidently take a buy, right? And depending on where you want to take this from, I can take a buy and ride this to the upside. Again, take my buy from here, could put my stop loss below the previous low right over here. And then I take this buy either to this next quarter point, right, which is going to be 25 pips, or if I truly believe this is going to break, I can hold and wait for it to break and take it to the next quarter point and take it for almost just about 100 pips over here. Okay. Now, in terms of knowing where you're going to take your take profits, knowing where you're going to put your stop losses, same thing as we said before when we talked about taking sniper entries. If I'm looking for my stop loss, I'm looking at this lower time frame and I'm looking at my previous low right over here to my left, right over here to my left. I'm looking at this previous low. I want my stop loss to be below my previous low because I know if I'm trying to take a buy, if this retest breaks the previous low, it's invalid anyway. So that that trade should close out because it's invalid. So that's where I keep my stop loss. And because I'm on the 5 minute and I'm looking at this and I take my stop loss on the 5 minute, my stop loss ends up being just 28.5 pips, about 29 pips. That's not a bad stop loss for gold. But when I'm trying to look for a take profit, what do? Does anybody remember what do we do when we're trying to look for a take profit? Do we look for a take profit on this time frame? If I'm trying to look for a take profit, right? If I'm putting this all together and I'm trying to look for a take profit, where am I going to look for my take profit? I'm going to look for my take profit on a higher time frame, right? I'm going to go to like the 30 minute. I'm going to go to like the 1 hour. And I want to take my take profit based on market structure, what market structure is showing me on a higher time frame. All right. If I'm scalping, I'm scalping. I'll stay on the 5 minute. But if I want to take the majority of the move, then I have to pay attention to what price is showing me. All right. Have to pay attention to what price is showing me. Okay. So over here, price, I can see that this entire range to the left-hand side, right, can be filled. This entire range, this big candle on the left came all the way down, right? We had consolidation. And then on the 5 minute, I took my entry right over here. My take profit, it's very plausible to think that my take profit can definitely fill in this entire candle. And that's what it did, right? My take profit filled in this entire candle, and I can take profit right at the beginning of this area, right? As we get to this next quarter point, I could take my take profit right over here. All right. Let me see. What questions do we have, guys? Let me take a pause. I know that's a lot. And it can look confusing, but it's really not that confusing. Once you start putting the quarter points on your chart, all you got to do now is start looking to see and marking off those areas that is starting to be respected by those quarter points. All right. So again, once you put those things on your chart, just take a look and see where are these areas being respected. Mark off these areas. Okay. And then see how you would have been able to enter if you follow these areas in the live environment. All right. And then now when the market is currently live, right, and you don't have anything of reference, but you can still look back and see where these areas were respected, right? So for instance, gold is hovering right around this level over here. Gold is hovering right around this level over here, that 2055, right? A lot of respect towards this level. Is it going to break higher? Is it going to break lower? We don't know yet, but what we do know is that we are on an uptrend. What we do know is that we are on an uptrend. We know that we are on an uptrend. What else do we know? We know that we are also on a retest. We know that this is a retest, one big retest that is going on. Now, the retest could definitely come lower, but either way, we're on a retest. So what would I do to capture this move? I know I'm on an uptrend. I know I'm retesting the uptrend. So bias wise, I'm looking for buys. How do I capitalize on this buy? The best way to capitalize on this buy? Well, I have a quarter point that it's being respected right over here. This quarter point is being respected. Fine. Let me break this down on the lower time frame. As I get to the lower time frame, in addition to the quarter point being respected, I see that there is a large area of resistance over here. Okay, a large area of resistance as well as a large area of support, right? So if we take this entire area and go like this, and we take this entire area and go like this, let me just remove that ellipse so you can see it very clearly. If I do this, does that make sense to you guys? All right. Does that make sense? So in other words, we're within a range. We are retesting. We are retesting on the higher time frame. On the lower time frame, we are within a range. So the way I capture this with using quarter points, with using everything that I know, allow this to break. Allow this to break, right? So once this break, what am I going to do? I'm going to add an alert right here. I'm going to add an alert right over here. So if I'm looking for buys, as this breaks towards the upside, I'm going to allow that candle to close maybe like on the 5 minute, right? Allow that candle to close up here on the 5 minute. And then I'm going to take my entry right over here, take a long position right over here. And if I want to play it safe, I could ride it to the most previous area of resistance. Most previous area of resistance happened to be where? At the next quarter point. At the next quarter point. All of this is support and resistance. But the quarter points just give you extra confluence and confidence when you're going to take that trade. All right. So at the next quarter point, that happens to be where my resistance is. So if I'm going to look for a TP, I feel pretty good making that my TP, especially if I break out of this consolidation over here. That's an A+ setup. To me, in my book, there's too much going on, too much confluences going on for me that gives me credence to say this is an A+ setup. What's going on? We have a bullish impulse to the upside. We have a retest. So number one, you have the retest. Number two, you have the quarter point. It's retesting at the quarter point. It's all around this area, right? That 2055 area, the quarter point. Number three, now the third confluence you'll have is as it breaks out of this area of resistance, right? You have a breakout, and that's going to be another confluence. You'll have the breakout proving to you, letting you know that this trade is ready to move on to the upside. That is an additional confluence. And the final confluence is going to be if you wait for a retest, maybe on the 5 minute on top of this previous area of resistance. All right. But all that said, I can confidently, if all of that happens, I can confidently take my buy from this area to the next. Maybe you get in a little later, maybe you get in perfectly, but that's 50 pips easy. Can it go higher? Without a doubt. What's the most safest trade? This right here. Taking my 50 pips because I know it has the range to go up there. I know it has gone up there before. And on top of that, that happens to be the very next quarter point. I'm good with that. Does that make sense, guys? I hope that makes sense. There's so many reasons why this quarter point theory is so valuable. So valuable. All right. And this is the way you bring it together. Now, when you're in the live environment, this is how you bring it together. You start anticipating the next move and the next move and the next move and the next move. Okay, so you can start using this quarter point theory, apply it to your trading, right? It may work for you, may not work for you. So for some people, I know my boy Dietrich, it works for him tremendously, right? But try it. It's good to try these things out and try to start understanding, you know what, this really works for me, or this, maybe it doesn't work for me, but it's good to know, good knowledge to put into my tool belt. Okay, guys? All right. So I hope all of this was clear, but even if it wasn't, guys, go through this video again. It doesn't, you may not get it on the first try, but again, you just got to play this over and over. But more than that, you got to actually apply it. You got to actually go into your chart, put in those quarter points. So with gold, we see that those quarter points are going to be that those 2040s, 2045, 2050, 2055, whereas the JPY pairs are different, right? It's going to be 147, 250, 147, 500, 147, 750, then 148, right? Where the number schema is different from the JPYs to gold, and is going to be different from the other regular forex pairs. So like something like GU, right? You're going to have 127, right? But 127, give me 127 250 will be your first quarter point, right? 147 250 is going to probably be your first quarter point. Let me just double check that. Don't want to give you wrong information. 147 250, that's 25 pips. Yep. 147 250 is going to be your first quarter point, and then 127 500, then 1.27 750, and then finally 1.28. So just it's a little funny depending on the pair that you're trading. The regular forex pairs, they're going to be a consistent schema for that in terms of the numbering system. The JPY pairs are different. Okay, so just practice that, and again, just check those 25 pip ranges. 25 pip ranges. If you don't want to do 25 pip ranges, do 50 pip ranges. That's fine. Those are still going to apply. 50 pip ranges. Okay, just use your ruler. Make sure it's 50 pips if you're unsure of the number schema, and then you'll finally get it. And then gold is going to be something else along with other commodities, silver, oil, etc. Okay. All right, guys. So I hope I hope this was really helpful. All right. It's a powerful, powerful methodology, powerful tool. Just use it, apply it. You'll be surprised. Maybe it does work for you, and maybe it transforms your trading, guys. All right, guys. So I appreciate all of y'all for tuning in again to our development session. Send me some suggestions. What else do you guys want me to go over? What lesson what do you guys want me to cover? I'll be happy to take some suggestions. If not, then I'll just keep going based on my schedule. But I appreciate you guys always for tuning in, and can't wait to see you guys the following week for our next session, guys. Appreciate all of you guys. Happy trading. Let's keep making those profits. Make sure we end off strong for the week tomorrow. And until next time, guys, I'll see you guys. Thank you.